TikTok finalized a deal for its U.S. entity. David Ellison extended the deadline for the Warner Brothers Discovery takeover offer. And Elon Musk just told Davos that Tesla will sell humanoid robots next year. It's Friday, January 23rd, and here's a quick look at tech in the news this morning from Engadget. TikTok has finalized the deal for its U.S. entity, with its parent company ByteDance selling the majority of its stake to a group of non-Chinese investors. The deal was closed just before the Trump administration's latest deadline banning the app in the U.S. unless it was divested from ByteDance, which will only retain 20% of the new entity. TikTok's investors will own 80%. With Oracle, Silver Lake, and MGX, an Emirati state-owned investment firm, taking 15% each. Other investors include the investment firm of Dell's CEO. The terms of the deal were first leaked last month, and this ends a lengthy saga and months of slow progress as the agreement was being worked out, ensuring that the app will remain available in the U.S. after years of being on the verge of a ban in the country. Well, according to TikTok's announcement, the joint venture will protect American users' data with Oracle's secure U.S. cloud environment. It will also retrain TikTok's algorithm on U.S. users' data and will be in charge of content moderation in the U.S. The entity promises interoperability as well, promising that users will still get international content, and if they're a creator, viewers. The new entity will be overseen by a 7-member board of directors, most of whom are Americans. Paramount Skydance CEO David Ellison is apparently still hopeful that investors will approve his $108.4 billion hostile takeover of Warner Brothers Discovery. Paramount Skydance announced on Thursday that it is extending its all-cash offer to acquire the studio and giving investors until February 20th to accept it. The company's previous offer expired on January 21st, but with a lawsuit in the works and a revised Netflix deal to compete with, Paramount Skydance wants to stay in the conversation. Netflix and Warner Brothers Discovery originally announced their $82.7 billion acquisition agreement back in December. Netflix's deal is for a significant portion, but not all, of Warner Brothers Discovery as it exists today. If approved, the streaming service would acquire Warner Brothers Film Studios, New Line Cinema, HBO, HBO Max, the company's theme parks, game studios, and select linear channels like TNT, but not the collection of reality TV and news programming that Warner Brothers Discovery calls global networks. Paramount Skydance made its competing offer of $108.4 billion for all of Warner Brothers Discovery a few days later in December, with a recommendation that shareholders reject the Netflix deal. To add pressure, Paramount Skydance also sued Warner Brothers Discovery in January, alleging that the company had not provided adequate information about why it favored Netflix over Paramount. Now, beyond offering more money, Paramount contends its deal is more likely to be approved by regulators because owning Warner Brothers doesn't entrench Netflix's market dominance. Warner Brothers Discovery claims that funding for Paramount's deal remains inadequate and that the company is uncertain Paramount Skydance will actually be able to complete the deal. David Ellison was previously able to merge Skydance with Paramount using the financial backing of his billionaire father, Larry Ellison, and the Ellison family's friendly relationship with the Trump administration, promising to make sure that CBS News represented a diversity of viewpoints via a newly appointed ombudsman, and that the merged Paramount Skydance will not create any diversity, equity, and inclusion programs, was enough to get the FCC to approve the merger. Ellison might have thought acquiring Warner Brothers Discovery would be equally as easy, but at least so far, that has not worked out as planned. Elon Musk took the stage recently at the World Economic Forum in Davos, Switzerland, and announced that Tesla's Optimus humanoid robot will be sold to the public by the end of next year. Now, Musk is the master of unrealistic timetables, but this may be the nuttiest one yet. These are humanoid robots that are supposed to be able to do just about any task that a human could do. Musk, as usual, gave himself an out if the robots do not start rolling off the assembly line in 2027, saying that they'll only be released when Tesla is confident that its very high reliability, very high safety, and the range of functionality is also very high. He stated that the robots have already begun doing simple tasks in the Tesla factory, but there's no proof of this other than his word. In the real world, Optimus robots have continuously failed to live up to the marketing hype. There have been plenty of reports suggesting that previous demos of the robots in action were actually smoke and mirrors, as they were being remotely piloted by human operators. Tesla's stock jumped over 3% upon this announcement because company investors live in a world of magical rainbows, unicorns, and robots mixing drinks at home in the year 2027. Musk also recently stated that the robots would be ready for commercial deployment in 2026. Now, that's this year. It is worth noting that the program head for the project recently left the company. Again, these are autonomous robots that are supposed to be able to perform complex tasks across a wide variety of categories. That'll likely happen someday, but not by 2027. Thanks for listening. There's more to these stories and more tech news at Engadget.com. This episode featured journalism from Mariella Moon, Ian Carlos Campbell, and Lawrence Bonk, and it was voiced and produced from the sound studios of Spoken Layer. Enjoy your weekend, and I'll be back on Monday morning with more tech news from Engadget.